Greetings, members one and all of the Salivation Nation. Gold and silver crushed today, and here is why. Let's explore. Yes, an article first coming to us from MarketWatch. Gold prices drop over 4% for the biggest one-day loss since November. And the silver has lost nearly 7% for the week. Let's take a look at it, and then we'll look at and see what the prices are moving at the recording of this video. So gold futures dropped by more than 4% on Friday to log their biggest one-day loss since early November, as yields for U.S. government bonds extended a weekly climb, eroding some appetite for bullion, which competes against haven sovereign debt for buyers. Strength in the U.S. dollar also pressured dollar-denominated prices for gold. The bearish fundamental of very little risk aversion in the marketplace is present is working against the safe haven metals, said Jim Wyckoff, senior analyst at Kitco, in a market update Friday. Benchmark U.S. stock indexes carved out fresh records Friday before pulling back. They are set to end the week higher. A higher U.S. dollar index is also negative for the metals, Wyckoff said. Meanwhile, Bitcoin, which hit a new record high, may be stealing some of the trader-investor-buyer interest that would have had in the past directed to the safe haven metals, said Wyckoff. So there is an analyst admitting that very well could be a possibility. It's been talked about on this channel a little bit, but I know mostly in the comments too. I mean, good grief, it's crazy to see how Bitcoin has gone parabolic, almost doubling what it was when I sold what little I had and put it towards gold. February gold fell by $78.20, losing 4.1% to settle at $18.35 an ounce. This was the lowest settlement for most active gold futures since December 14th, according to FactSet data. Prices are also the worst one-day percentage loss since November 9th, according to Dow Jones market data. Silver for March delivery was down almost 7%. Meanwhile, it fell $2.62 or 9.6% to $24.63 an ounce. That was the largest single session percentage decline since the 21st of September of last year. And based on the December 31st settlement, which was the last trading day of the last week, gold has lost nearly 3.2%, while silver saw a weekly slide of 6.7%. A weaker than expected December U.S. jobs report failed to provide much of a lift for metals on the session, even though analysts expect more fiscal stimulus from the incoming Biden administration. And that's interesting to see. I mean, I did post a video earlier saying that, that we could actually see lower prices at the beginning part of 2021. Well, here they are. It's interesting to see. And it's surprising to see such a massive downside move for the gold price when the U.S. job numbers have clearly indicated that we're not out of the woods. Naeem Islam, chief market analyst at Avatrade, told MarketWatch. However, traders believe that negative news is good news because it means more help from the Federal Reserve and from fiscal policy, which is supporting the risk on trade. He said U.S. benchmark stock indexes traded mostly higher in Friday's dealings. Of course, understanding how the stock market can be propped up by this good news of more injection of liquidity into the markets, stimulus going out to people, and you do enough of that, people are saving, paying bills down with it, but some people are going to be spending too. You do enough of that and get the velocity of currency going, that's what's going to cause higher inflation, which we've talked about recently as well. And so my guess is the markets are betting that we can just keep doing this for a time, and people will be happy, and the markets will be happy, and everything will just go great, whereas the dollar really, in a sense, is just being pushed into further devaluation. The more you print, The more you digitized, the more that velocity is going to happen. The threat of it happening, and it could happen very quickly, and it could happen in such a way that it could cause panic and hyperinflation. That's the fear. There's more of a threat of that now more than ever because of this. And in closely watched employment reading shows that the U.S. jobs lost in December for the first time in 8 months as the spread of coronavirus and variants of the COVID-19 forced fresh lockdowns in parts of the country. Businesses and government shed 140,000 jobs last month, the Bureau of Labor Statistics said Friday. The official unemployment rate, meanwhile, was unchanged at 6.7%. Aslan believes the prices of gold have been way oversold, and this means bargain hunters are going to step in soon, which will essentially probably edge the prices up or stave its drop. The 10-year U.S. Treasury yield was nearing 1.1% after ending 2020 at 0.926, marking the powerful uptrend for the benchmark note in the first full week of 2021. Higher Treasury yields can spell weakness for gold, which, like other commodities, offers no yields and suffers more by comparison. The session slump for gold prices followed political wins by Democratic candidates in 2 Senate runoff races in Georgia earlier this week that paved the way for further fiscal relief measures from President-elect Joe Biden after he takes office January the 20th. This may well just be a bit of a catch-up move, with yields having risen all week following the Democrats' victory in Georgia, which gave them control of the Senate and completing the clean sweep, wrote Craig Erlam, senior market analyst at Oanda, in a daily research note. Gold has likely formed a short-term top this week, said Chintan Karnani, chief market analyst at Insignia Consultants. There has to be some new gold positive news for prices to restart its bullish trend, for the U.S. dollar index has to sell off further. Market participants said that the lack of upside reaction from gold may also be due to expectations that the jobs report may be even weaker and a bullish economic outlook that could hurt gold prices for the near term. Today's big miss on the jobs consensus forecast did not significantly move markets. Reason: traders and investors are so keenly focused on the bullish aspects of the likely end of the raging pandemic this year and the ensuing expected booms in world economies, wrote Jim Wyckoff. And people are really craving some good news. They want it so much, and that's why the psychology of the markets are having a play. And I think that is a really big statement here. The thing to consider here with that regard is that people are wanting good news so much they're willing it in terms of price movements and also a booming stock market, which has already been, in my way, in my view, kind of propped up or injected with these false sense of of a bullish market. It's been propped up by the Federal Reserve. Here's an article from Kitco that talks about here, can gold price drop below $1,800 next week? And then talking their view on what's behind this sell-off that we see today as the markets close on Friday. Precious metal investors were taken for a ride Friday when gold and silver plunged 4% and nearly 10% respectively. The increase in U.S. Treasury yields and the U.S. dollar were the main reasons behind this massive sell-off, analysts told Kitco News on Friday. Gold saw a daily loss of $80 at one point, with February gold futures last trading at $1836.60, down 4% at the time of the writing. The 10-year Treasury yield climbed above 1.1%. Despite daily losses, the move lower might not be over just yet, according to analysts. Right now, for the most part, rising Treasury yields provided a bid for the dollar, responsible for the sell-off in gold, said Oanda senior market analyst Edward Moya. It's too much institutional interest diversifying away from gold. There's a big fear that ETF holdings will drop as President-elect Joe Biden is expected to be more successful at squashing the COVID-19 pandemic. Gold is seeing intense technical selling. The gold space would see $100 moves in the next couple of days, added Moya, telling investors to pay attention to the U.S. dollar. The greenback bear trade has become overcrowded as the dollar's bearish positioning reached a decade-high level at the end of 2020, he said. There was consensus on Wall Street that the dollar will extend its weakness, with the Federal Reserve being the last central bank to raise rates. But what happened was the dollar's bearish trade was overcrowded. We're seeing the dollar rebound, and some gold bets are unwinding in the process. Very interesting to see how this is playing out. There's two catalysts right now that are causing gold to sell off, reading further down: rise in bond yields and the economy looking in trouble. This is causing liquidation and flight to cash, which is what happened back in March. This is important too. A flight to cash, but also, I think also too, there's been an article or some predictions that we could see Bitcoin go up to some insane number. I even forget the $146,000 of Bitcoin. And some people may be putting their money there thinking that we're on the way up big time for Bitcoin. For me, I don't really follow that. That's a risky move, but there's a lot of psychology behind that as well. FOMO is the big one that sums it all. I'm here. But we know the U.S. economy could be in trouble in the first quarter as lockdowns are being put into place by some states. Draconian, some people feel, and obviously in England as well, United Kingdom, we're seeing massive lockdowns there as well. So it's going to be interesting to see how this all plays out. But again, this has been talked about on this channel that the metals would potentially go down at the beginning of the year. And here we are. It's happening. Pretty big, shocking, crushing drops today, though. Look at that. 3.39% drop in gold and double that for silver almost. Over 6%. Crazy to think about. We had over $27 for a silver, and now it's below 26. It's hovering right around $25.47. And so we'll see how it all plays out. Very interesting day indeed to see these metal prices drop. It just goes to show you how much psychology affects the markets and where the dollar index is and these bond yields. Fascinating indeed. We'll see how it plays out. I did post a prediction video where I think silver is going to be. I hold to that because we're just getting started in the year. Anything could happen for sure. And it also means that anything could happen, meaning my predictions could be dead wrong. And I don't discount that very realistic possibility. We'll see how it plays out. In the meantime, I've been reminded by several members of the community who have been pushing me to sell my rhodium bar that it is up to $18,000. It is the only number here that is not moved in one direction or another, but obviously it did earlier because it's up to $18,000 now. I'm pushing more closer to that $20,000 level. So there you have it. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video and encourage you to please rate, share, comment, and subscribe.